Real estate market update. Today is July 23rd. Let's get after it. What's up, guys? This is Daniel, one half of the Kwok Brothers. I've got a couple headlines for you guys, and I'm going to give you my interpretation along with the research and what's going on right now in terms of should you buy real estate right now? That's the question that everybody has been asking for the last 3, 4, 5, 6 months, right? Everybody wants to know, well, when is the drop coming? We all want to get properties at the low, so we can get double-digit cap rates just like in 2008, 2009. So I'm going to give you guys my interpretation on whether or not you should be buying real estate right now, both on the single family and the multifamily sector. But before we go ahead and do that, guys, please don't forget to click on that subscribe button and also like this video. We'd appreciate it very much for you guys to be able to spread this information so they can go out there with the algorithm and many people can go out there and make good decisions on their finances. Okay, first update, mortgage rates fall below 3% for the first time in the United States history. And that's 50 years, guys, that we've been tracking the interest rates and they have not been this low, right? Freddie Mac did a study that the average 30-year fixed rate mortgage is now averaged at 2.98%. That's the average of all 30-year fixed rate mortgages, a study done by Freddie Mac. Now, why is that? Why are rates so low, right? Is it that so the banks can incentivize people to buy homes during the midst of this pandemic? Are they worried about the economy? Rates drop when demand for bonds and treasury bonds increase, right? So why is that? It was simple supply and demand. When you have a lot of individuals trying to go after the same bonds, the same treasury bonds, a lot of the yield tends to go down. It's just like in real estate, right? When you have a bunch of people looking to buy an apartment complex, the prices get a lot higher, therefore the cash flow decreases and it goes down because there's much more demand than there is in supply. It's just like real estate. But why is that, right? Why is it that mortgage rates tend to go down when the demand for bonds and treasury bonds tend to go up? Why is that? Well, typically it's because a lot of mortgage lenders will tie their rates with what's known as the 10-year treasury bonds. Matter of fact, not just the 10-year treasury bonds, but treasuries in general and the bond market as a whole. It's just like in real estate, right? When you have the single family house market and you have the multifamily housing market, typically when the single family house market is very hot and a lot of people are wanting to buy single families, a lot of the A class and the B class apartment complexes tend to suffer. Why? Because there is a finite number of individuals that are looking for housing in a particular area. And when rents are really high and the cost of acquiring a single family home is so low, they're obviously going to go more towards the single family house market. So therefore, more people go to the single family housing market, whether it's to rent or to buy. The less people, considering the finite number of individuals that are there as customers and consumers, tend to go down. Now, does that happen all the time, guys? No, right? You'll typically have a market where if it's an increase in population, that pool of consumers and customers is getting bigger and bigger and bigger. You may see scenarios where vacancy rates for apartment complexes stay low, right? It means the occupancy rate is high and there's a lot of volume in terms of transaction in the single family house market as well. You do see that. However, typically it's one or the other if you're looking at the entire 10-year market cycle. So the bond market and also the mortgage rates react the same way. The investors buy what they buy. Now, we are in a place right now where the investors are buying a lot of bonds. They're buying a lot of 10-year treasuries. And well, why is that? Well, I think it's safe to say there's a lot of volatility and uncertainty right now, especially with where we're at. I mean, think about how many balls are in the air that we're juggling, right? There's forbearances, right? No one knows what's going to happen with commercial real estate. There's a lot of headlines and speculation happening. We're all kind of waiting to see what's going to happen with the second wave of the pandemic. No one really knows what's going to happen with the economy. And surely the stock market is a reflection of that. I mean, if you think about what the stock market has gone through the last 4 months, even the last 4 months, we're looking at an insane roller coaster. And it's crazy. So a lot of people have pulled money out of the stock market and they're going towards more tangible assets such as real estate, but more importantly towards the bond market because generally speaking, bonds are deemed as a lower risk investment compared to stocks. So let's take a look at this, right? A lot of investors are indeed buying the 10-year treasuries, are indeed buying into the bond market, but the biggest buyer of all right now is our friendly neighborhood Federal Reserve. Matter of fact, the first half of July alone, they purchased $44.371 billion in mortgage-backed securities. Now, if you look at 2020 as a whole, the first half of 2020, the first 6 months of 2020, the Federal Reserve actually spent $2.1 trillion, guys. That's with a T, $1 trillion in mortgage-backed securities and treasury securities as well. adding on to their balance sheet. And that's why, my friends, mortgage rates are at such a low right now, because of all the competition and all the money going into these bond markets. And of course, the Federal Reserve buying up all these notes and buying up all these securities. Now, is that going to remain? Probably not, right? It's very, very unsustainable that the Federal Reserve is going to continue to purchase these securities and these bonds. It's very rare that that happens, right? Matter of fact, what's happening right now with the Federal Reserve having so much in their balance sheet is quite unheard of. So I highly doubt that's going to be sustainable, that we're going to continue to kick this can down the road. I really, really doubt that. So maybe there's a bit of a backlash, right? Well, that leads me to another headline that we see, that I saw this morning, is that foreclosures are at near all-time lows. Matter of fact, there's a 44% drop in the first 6 months of 2020 compared to the same period of last year, right? So what does that tell me, right? There's a lot of speculation that can happen here. You know, maybe a lot of you guys may be commenting down below saying, well, it's probably because of the stimulus. It's probably because of all these foreclosures, moratoriums, right? Where they're doing forbearances. A lot of mortgage companies are putting in special types of programs and, you know, to help people stay afloat. But of course, that's going to go down. As a matter of fact, I had a conversation with an individual who owns an actual mortgage company, and he's saying that he thinks there's going to be a lot of defaults and short sales that's going to happen around August of this year because of the second wave of forbearances that are going to be worn off. Now, this leads me to the question, right? There's a lot, we've covered a lot just in this video, right, that you're watching right now. And I did my best to try and jam pack it all in there, right? But comment down below what you guys are thinking so far and what your opinion is on what's happening. Well, we covered a lot, right? We talked about the Federal Reserve buying up so much treasuries and mortgage-backed securities. We talked about the bond markets and its relation to why mortgage rates are so low right now, below 3%, which is the lowest it's ever been. You know, we just talked about foreclosures being at an all-time low, which, by the way, includes defaults, guys, which includes a lot of different things that fall under the foreclosure umbrella. That all leads to this question: should we buy real estate right now? Let's talk about the single family house market first. Now, let me tell you the quick answer. In my opinion, if you're looking to buy a personal residence, my answer would be go for it, right? See what type of deals that you can get. But based on the conversations that I'm having with local realtors here in my home state of Illinois, along with a lot of different professionals in real estate that I'm talking to around the country, a lot of them are seeing huge transaction volumes in the single family housing market. They're listing homes for sale and they're gone literally within a matter of days. And if they're unlucky, weeks, right? I mean, I mentioned it once or twice, you know, that I sold my home literally within weeks of putting it out once this whole pandemic even hit, which hit me and caught me off guard, right? I did a video about that already. I encourage you guys to watch that. But a lot of transactions are happening right now. Now, of course, a lot of you guys are saying, well, Daniel, the mortgage rates are so low. Why wouldn't it be a good time? Here's my opinion, guys, right? The Federal Reserve already came out saying that they're more than likely not going to be raising rates for the next 2 years because they want to see a successful recovery. So my hunch, guys, is that my assumption is that mortgage rates most likely will stay at near same levels. Maybe they won't stay below 3%, but they're going to stay at relatively similar levels for the next 2 years. Now, what's going to happen when all these single family houses get back on the market because all the mortgage moratoriums wearing off, stimulus wearing off, right? All these defaults and foreclosures are happening just like they happened 12 years ago. What's going to happen? Well, there's a lot of demand right now with a certain level of supply. And what happens when the supply increases, not only increases slowly, but increases drastically? What's going to happen? Well, it's going to be a lot easier for those individuals who have the capital to be able to purchase a home, meaning that demand is not going to be as strong as it was like it is right now. Now, let me speak to the multifamily and the commercial space. I would actually say that there's similar opportunities coming, especially if we've been paying attention to what's happening in the commercial mortgage-backed securities market. I actually just had lunch with a very good friend of mine, and we had a discussion about this, and he happens to be the president of the Illinois Association of Bankers. And we were having very similar conversations where he believes that there's actually going to be very opportunistic time as a buyer of commercial real estate in about 3-4 months. And as a matter of fact, I'm going to feature him on the channel next week for another market update. So stay tuned, guys. That's why I want you guys to subscribe. That way, when we release that video with that individual, you guys are going to be able to see it first. And of course, like this video as well, because you're going to be able to have that pop up on your recommended and you don't have to go digging for it, right? You can just watch it right then and there, right? So I'm going to feature him on our next week market update video. But think about it, guys. If he's saying that as a president of the Illinois Association of Bankers, if he's saying that there's going to be a lot of prominent opportunistic times for commercial real estate buyers happening in 3-4 months, What does that say about the commercial real estate market right now? In my opinion, guys, based on what I've seen the last 3-4 years and all the deals that I've seen people do, all the interest-only loans, all the value add, rehab, assumption opportunities, a lot of these over leveraging investors in the commercial real estate space, and all the popularity around syndications and raising capital, I don't know, guys, right? Truth be told, a lot of the deals that I've seen the last 3-4 years, I've kind of scratched my head and questioned whether or not it was a good decision. So my short answer, should you buy real estate right now? No. But do I think it's going to be a great opportunity happening in 4 months? Absolutely, right? So I encourage you guys to stay tuned, subscribe, and like this video so you guys can stay close to the information we're putting out there. Thank you guys so much. I'll see you in the next one.